Barely got on in time. Barely got on in time. We're gonna watch CPI. If ICT goes live, I'm just gonna watch this live stream on live. Chill a bit. We got about 10 seconds before CPI. I'm expecting these highs to get cleared at least. Just look at the market structure. So let's see if we rip up for those highs now. So my guess is what could happen. A little gap in here. Is that fair value gap? Thought I had a chart with ES. ES didn't even put a like a wick on that. Looks like we're drawn to this new day opening gap. Let me see if that worked. Yeah, bet. Alright, just by look at this, ES didn't put any wick. It knows where we distributed from. New week opening gap. Obviously, this is hindsight because I don't really care to try to be in front of CPI. And knows where we distributed to. So we have sell side taken here on ES. We left buy side. If we look at this, market structure overall is bullish. We have a 1 hour gap here. Let's see if we want to take this low. I don't know if we will yet. I feel like we're saving that. I want to see us come up and take this high at some point. We don't need to. Overall, we still have that new week opening gap that hasn't been filled yet. So I am looking at that, but just by looking at market structure, I assume that we're probably heading this high at some point. But now we have a news high and a news low. So those are going to be potential good draws on liquidity, especially for CPI. Top right. Five-minute candle is closed. We have a 1 minute candle. Or 1 minute. This is a 1 minute candle. And we have a volume imbalance here. Can mark that out. Usually, from what I've seen, is when we have CPI, we kind of like to refer to equilibrium of that range, like after that news releases. So let's see if we draw up into this volume imbalance here. That could be a potential draw on liquidity. We traded higher, so we've had some form of market structure shift, I guess. So let's see if we enter this. Also a 15-second BISI. You have that wick and then that candle. So that's a redelivered rebalance. It's all a 5-second gap here. Notice how that redelivered rebalance. The reason why that's really an array because on the lower time frame, it's a fair value gap with an order block. So you see how we have an order block with a fair value gap? That's what that wick is. Redelivered rebalanced. There's a volume imbalance here. With a down close candle. Also this volume imbalance. Do I have the previous high and low marked? Yeah. Let's looking aggressive here. Notice how the, I thought we are gonna use that as inversion. Hey. Notice how we delivered to the very high end of that. Now we have a possible gap here. Then we have news low here. Usually I tape read at least a little bit of Asia, or recently I have been, like tape reading some of Asia and then like honestly some of London, but I didn't do any of that today or yesterday. So I got some nice rest. Okay, let's see though. We have minor sell side here. This could be a catalyst for a trade higher. Kind of like yesterday. Other than that, we do have news low here, so that's a very potential strong draw on liquidity, because we've had that initial push higher. People try to chase this, whatever. Thinking that we might be going to a volume imbalance. They might be marking out like some inversion fair value gaps on the 5-second. They enter, put their stop maybe down here. Let's look at this. Look at that delivery. Down close candle. We also have that new day opening gap up there. Bro, what? All right, now we have a volume bounce here. You notice how we barely didn't deliver to that. Look at the body there though. Looking at this. Also constant encroachment of that. Inversion on the 5 second. I do want to look at news on the 1 second chart again. Like this looks like a whole like day, you know? It was really just 1 second, you know? How many points is this? 80 points in 1 second. That is crazy. It's wild. Then we come back up. Volume balance. Trade lower. Then we trade back up into that range. Volume imbalance delivered. New day opening gap is next, possibly. Dang, this thing bright. Oh my gosh. I wasn't even looking at ES all that time. I guess I don't need yeah, I'm gonna just close this. I don't really need that open. Now I got ES on. ES delivered to a new day opening gap. ES though, I like that we have a candle with no wick. That's a devil's mark. So right now, where we currently stand, we've delivered to this volume imbalance here. We have a news high and a news low. We're within the middle of a range. I could see us like generating some liquidity here, keeping these highs here, dropping lower, news low gets engaged, and then we trade higher, or we just trade higher. But my overall interest and bias is higher prices. But we could keep this low here, and then deliver to that high to then have a sell model. Look at ES. ES looks pretty bullish here, or not pretty bullish. I don't know if we're ready yet, but it's looking like we want to mount a run to maybe that 8:30 candle. In my back testing, in my studying, or at least recently, I've noticed that. I guess I can't really say that because I've noticed it like 2 times, but anytime we have a candle with no wick at 8:30, well, there's a very small wick on this, and it's a news candle. This will likely be an influential draw on liquidity. So let's just see if that does get targeted at some point. Throughout the rest of the day. Here we have a Bissy here on the 1 minute. This kind of might be a breakaway. We have just delivered to this new day opening gap. We're finding support at that volume imbalance, daily volume imbalance. Traded lower. Like, I don't know. I don't really love this. Let's wait for 9:30. Look at this. We come down. We swept lows. We have a news low now. So this happened below true day. Smart money is able to accumulate that, and I think we're gonna distribute at these highs. But if we look at this, sharp move down. I don't know if sharp move back up. I think maybe sharp move down, accumulation, and then expansion maybe at 9:30. Notice that whenever we have 8:30 news, I'm looking at 9:30 to see if we possibly have a reversal. Yeah, look at that constant crochet though. With that volume balance, notice how we're respecting a volume imbalance. That's telling. Also have this like inversion right there as well. Very nice. Very nice. Like dropping down to minor sell side. Bissy right there. With this inversion. With that volume balance gets delivered. Nothing crazy though. It is a CPI right after it, so probably not the best time to trade. And now new day opening gaps getting delivered. ES's new day opening gap is above that devil's mark. If I pull it up here, my new day opening gaps are always yellow. The previous new day opening gaps are always like white. Here's the new day opening gap above that. So this is why looking at that could be a draw on liquidity. We come back down. We've upset all this, so we do have an SMT. I'm pretty sure. Yeah, we should. That's a 130 low. I didn't even look at that. Yeah, smart money's accumulating that. Like, it's literally below true day open. If we have SMT, smart money's accumulating that. Simple. Like that's what it is. If we're above true day open, we have a SMT. If we're in premium, smart money's accumulating that. Okay, now let's see if we do deliver to this high already. I don't know if we will. I could see ES pulling back in the range, delivering to that Abyssy to then trade higher. I don't just see us going straight up. So now people have sell stops that are trailed here. But I don't know what array we would draw back into on ES or on NQ. Maybe. I want to get this constant encroachment here. It's looking like we just want to deliver to buy side. CE on the 1 minute, same as the CE on the 5 minute. Also the same CE on the 15 minute, so. Okay, news high just got delivered. Previous day high as well. We have that. Next draw on liquidity. ES is buy, trade to that. Devil's Merc. Ooh, I never got this level. I do want to see this 25% level. Is that influential? I've been using Wix a lot more in my analysis. Okay, that's pretty much the same as the 15 minute. Oh, yeah. Look at the bodies there. We're taking sell side. Bodies are closing back above that. Whew, that's beautiful. That's beautiful. And then we get that shit to market structure. I was kind of not loving this at first, but I want to see that expansion. And then we got that Abyssy right there. We're kind of flirting with previous day high. We're in a new day opening gap and a new week opening gap. But this new week opening gap's kind of older, so it's not as fresh. See, because like when you use the indicator, since TradingView can only plot so much data, like I don't have infinite data on the 1 minute chart, so therefore like these won't show up on the 1 minute chart. They'll show up on the higher charts. All right, news high and previous day high got delivered already. ES delivered the new day opening gap as well. I do want to look at some CPI data here. Uh, I don't know. I don't have too much. Really? Come on. Really? Man, I can't just look up CPI. Oh, I had to have it all caps. Uh, oh, dude, this day was so. I remember this. Like, look at this CPI day. This has to probably be like the worst CPI day in history. We manipulate, deliver 400 points within that like these are the days you want to completely avoid CPI. At least today was a little bit more gentleman's like, so therefore it can be actually traded. But here, oh my, 400 points, and then we just absolutely like this is a whole day. This is a 5 minute chart. This is the whole day. This is what we did, and look how many new day opening gaps we have here. That is crazy. Like this is that prolonged consolidation that we had. Um, CPI. Don't. This is in 2021. I feel like 2021 data, CPI was as influential as it is today. Here we have news high, news low. We don't deliver the news high, we deliver the news low. And then once we take news low, or wait, this should be news low. We reverse. This was last month's CPI. I remember that. We have this news high, news low, accumulation, manipulation, distribution to news low. This was beautiful. I don't like these chart colors, to be honest. I don't know if I like the black and white. 2/14 we had a CPI. Why do I not have that? Oh yeah, I did. Getting a little animated here. I was kind of expecting this a little bit more rather than lower prices. Notice where we come back down though. Last two down close candles. That's the order block with SMT in a discount. I wish I was paying more attention. Like yesterday as well, I wasn't paying attention to kind of the overall narrative with ES on the higher time frame, such as the low key. What my higher time frame has become now is the 15 minute. I really like looking at the 15 minute for intraday volatility. The 15 minute for me. You're gonna be able to see so much on that chart. That's influential. Okay, if we look at ES, this could be just like a crazy expansion day. or either just more expansion or just consolidation. Because now this, you see how we had that devil's mark that it's now was a draw on liquidity. This now becomes an order block, especially if you have displacement. But we have previous day high, so for me, we would have to immediately reverse at this previous day high here on ES, which I think is pretty unlikely. We've already taken sell stops. We've already accumulated. So our money has accumulated below here, and I think we're just going to distribute for the daily range. If we look at the daily chart as well, we don't really have an imbalance at all. We have this daily BISI on ES. We have a wick here that actually, I'll mark that out. And then we have this volume imbalance up here. So constant crochet of this wick. There's probably a better way for me to do constant crochet of daily wick, marking it out. I'm gonna make that bolder. It's daily level. We also have constant crochet of this wick. So premium array, premium array, premium array. Also new week opening gaps. That's what I'm looking for. Potentially on the upside of yes. Do we respect CE of this wick? Oh, look at that. That's beautiful. So just by a look at this, it looks like we are in a little bit of a buy model here. I wish I had this level marked before. That would have been nice. It's cool, it's cool. We now are trading above new day opening gap. Right at new day opening gap right now on ES. Okay, let's look at NQ on the daily. Oh man, bro, I didn't. This is what I need to get a little bit better at. Is just seeing these daily, like, if you come in the market, you have these levels already on your chart. Like you are doing well. And it's fine. It's completely okay with seeing them in hindsight. Like that in my opinion is nothing. There's nothing wrong about that. Okay, we also have this volume imbalance here. Dang, hella volume imbalances on the daily chart. All influential. I like to lock them. We're at this old low here. I don't have any of these lows or highs marked out. Is orange the move for a daily volume balance? What could be like a better? I, I, I think orange is acceptable. Blue? Blue's like inversion for me. Yeah. Yeah, I like orange. Maybe like a yellow. That's what I was thinking. Yellow. But yellow's new day opening gap for me, so wait. Oh, I see. We had that low at that daily volume balance during London. We could potentially have a 930 reversal here. I'm looking at this gap here. This gap, if we close below that, I'm looking at this low here. This kind of looks like that profile we had during NFP. Potentially, let's pull up NFP. I don't like how I had this green buy side imbalance here, but here we had NFP, we delivered lower, then we delivered higher, news high gets taken, we accumulate before that, then we manipulate, then we distribute at 930. So definitely a possibility that we have in mind. If we look at the daily candle, I think it's where we're at. It's a little bit different. So I wouldn't really expect to see a 930 reversal. But we'll see if we deliver up into these premium arrays possibly. Yeah, I feel like we can delete all these. These don't really matter at this point. We're looking at more pertinent annotations, not stuck in the past. Because there's always going to be more opportunity. 100%. It's one of my struggles is the fear of, or not the fear of, but like thinking that I missed out. So I guess FOMO, but acting like there's no more opportunity now that I missed out on that opportunity. Just so I look at this though, I do, the fact that we do have that SMT there, this could be a strong low, because on ES we swept liquidity, so there's not like a So we've actually taken liquidity here. So if we didn't take any liquidity, then I would be more open to seeing that get traded too. It's still a possibility, but I think it's more unlikely. We are opening up in a premium. Okay, 9-3 low got traded to. I kind of want to take this off my chart a little bit. Maybe I have it low key. Yeah. I want to see if ICT goes live. If ICT goes live, I might start watching that. But is that weird if I'll be watching that on stream? I don't know. ES about to be delivering the previous day high. And we have a nice order block. So I actually don't really like any lower prices today, to be honest. ES, it's just hard because we've delivered a very nice power 3 already. So just by looking at this, 8:30 open, low, high close, possibly. It's hard for me to really say that we're gonna come all the way back down, especially with the daily chart looking at how it looking like it is. I think it's more. I'd rather see upside objectives. What is market structure overall as well? Bullish. Market structure is bullish. We've just been one-sided this week. Kind of just a little, not really too much here. Not really expansion. Now we've had a big kind of we've had manipulation lower, taking this low. So I think we could distribute up into this high, but I doubt this high will get delivered to at least today. Consequence of that wick is what we're looking at. It's also that's also the daily constant encroachment wick. Ten minutes till market opens. All right, ES delivering the previous day high right now. For me, that's not a reversal. For me, I'm not expecting a reversal. I do want to annotate 8:30 open. Noticing liquidity up here. Let's see if we want to deliver to that. That's completely reasonable. I want to take off all these annotations. Just look at this chart. Nothing on it. This looks completely okay for us to trade to this high. I could definitely see that happening in delivering today on NQ. We've had manipulation. Next is distribution. Accumulation, manipulation, distribution. SMT confirms smart money is accumulating that. Where we have willing buyers right now. At this high right here. Also is Friday's daily high. Also is NFP high. So notice how NFP was like a Judah swing here. I'm just gonna, I guess I might keep it like that. Okay, ICT just went live.
Good morning, folks. Give me 1 second here. All right. Hope you're all doing well.
So what I do when I watch these is I watch them once while we're watching it live, and then I'm more looking at my charts, annotating my charts while I'm watching it, and then I go over it again, and then I take notes on it while I watch it again. So I really take notes when I watch it the second time, because when you're watching it the first time, you really don't pick up too much, because I'm mainly looking at the charts.
All right. So we're looking at the post effect of 8:30 high impact news driver. We have a huge premium opening.
Huge.
So we're going to look at that real quick over here on the 15-minute time frame.
I don't know. We're not in that big of a premium. Or if we look at True Day, yeah, we are. True Day's all the way here, so we are in a premium. This is discount.
So we had a previous settlement close at 18,846. So you can see we're up here in the 920s. So it'd be a large gap. Now we're in. Let me go back to a
Oh, I need to be.
daily chart. This inefficiency here, that's what I'm annotating there, and that weekly inefficiency, that larger one, and then there's one right in here. Okay, you see that?
I didn't even see that.
On it. So we traded down to that, and then traded to the high of this inefficiency that I'll change a little bit in terms of the colors that we can see. So that's where you're at the top of that, right there, right here. So they're putting relative equal highs in there at the high of that inefficiency. And there's a small little inefficiency in the form of a volume imbalance between this candle's close. You see that at 9.24 3/4 and the open at 21 even.
He's talking about this.
So they accomplish both here. Trading to candlesticks low here and repricing to that volume imbalance. Okay.
That's what's the daily fair value gap he's talking about.
Separation between these two bodies, these candles respectively. That's that price right into that. Now I want to see if they want to make that area a little bit more jagged, or if they're just going to be content with leaving it just as it is here.
Look at the body at the daily. This is daily inversion.
Okay, another 2 minutes or so. We'll have the opening bell. This is a 15-second chart over here on the right-hand side.
ES is just taking previous day high, by the way.
Go down to 15 on the chart on the left.
About to have a 15-minute busy. 8:30 opening.
Five-minute on the left-hand side chart. I'm watching this inefficiency right here on the 15-second and with the order block right there on the 5, seeing if they have any interest in that. Maybe as an inversion. There's a sell side resting right down at 888s, 886s.
Notice how the sell side is that 5-minute busy.
.30 seconds. Opening bell.
A little sibby here.
There's your opening gap. Previous settlement to opening. Half the gap's already traded to.
Notice how this 15-second sibby to that gap right there, to that sell side. That's like
that, gap I was telling you, use it for inversion in here. Volume imbalance included. There's that. It's almost like voodoo. The voodoo that we do. Almost full gap closure. You see a little separation in there still.
Traded that busy here.
So deep retracement back down inside that opening range gap. Half the gap closure. Be interested to see this same inefficiency on the 15-second chart. If you can climb above that, find that as a discount array, be interested to see if they want to swipe that 18,928 level. Just relaxing, sitting still.
Bro.
Protein shake.
I thought that was like a rooster, bro. Look at the consequence of that 5-minute wick, though. Right there.
ASMR.
Bissy right there.
So if you see the little shaded area here that's a little darker than the other area up here, that is the top of an inefficiency on a hard time frame chart. So I'm watching that to see if there's any kind of interest in using that level in addition to this inefficiency right there. Right now there's buy side sitting at 928. Sell side resides at 852.
We dropped it into a discount to then trade higher. 852? Where's that? Sell side. Oh, he's talking about this. Potential order block here. Possible reclaimed.
Okay, so we had the gap down here used, ran back up into inversion fair value gap. Wick through it, the bodies are staying below it.
Order block failed. We trade through that.
New day opening gap on the 11th. Today's new day opening gap. Draw on liquidity. Watching the midpoint of this
Look at that
wick.
opening range low right there. Look at that new day opening gap.
Okay, full gap closure, and then just the bodies. Right here at the, that's this level here. Okay, so previous settlement on regular trading hours, you can see that down here.
Okay, new day opening gap traded to. This kind of looks like this looks a little aggressive.
Opening gap, and then to the top of that old daily inefficiency.
This looks a little aggressive here. So we could be drawn to this. Classic 930. I just don't like these highs here. I don't. ES is displaced after taking previous day high. Like, I mean displacement.
seeing if we can find the previous settlement. Does it want to explore lower? Or if it gets back inside the range, we have to wait and see what we get in regards to that. So far it's been delivery off that inversion fair value gap here if we're gap closure.
All right, let's see if we find support here. This would be the level I'm interested in. Is this new day opening gap? If not, I would like to see this roll over to possibly take this low.
Okay, we're inside of the gap. That's this from here to opening price. So this previous settlement price and here, we're back inside of that now. Now it can do a lot of this type of wicking and redelivery back in here because there's no real bodies. Notice that here. Let me highlight it on the chart to the left.
We've had a stop hunt though, so I like this Cibi here.
I don't want that color because it's not gonna. So in between here, there's no bodies. There's wicks there. Then we have one single candle body down. So what we're seeing here is actually very efficient equilibrium price. It's going right back up to reprice over top of that little segment of price action right there. Distinctly framed by these bodies in that previous settlement price there. Now my interest is, since we had this area here and we delivered price, does it have a willingness to come back down, and does it respect the top end of that blue box area there? Because if it is, it becomes now a balanced price range. If it trades below it, that is decidedly weak. So we're at a juncture where it becomes now a balanced price range. If it trades below it, that is decidedly weak. So we're at a juncture where the price would need to have some respect of that blue area where it's at now, or if it goes below it. All this was is retracing it back into the opening range the first 30 minutes and after the gap closure.
Notice that Cibi, you have a gap right there, you have a wick right there, you have a first presentation. I think this holds. We have sell side here, and we have the larger pool of sell side. ES is kind of showing us the cards here, in my opinion. ES just shit the bed. Possible institutional overflow entry drill here. If not, let's see if we remain heavy to this low.
See how price just delivered there. Next key levels, Thursday, last week's daily low.
That's this level right here.
Watch this line in here. Okay, that's that old. Let me take out the daily. That is this. See that candlestick's low right there on Thursday, September 5th. That's this dashed line. It's a little hard to see because I got these colorings on it. Watch that and the end dog in there. Because we broke lower here. Take this sheet bigger off. It's too much for me.
We're trading up in the order block here.
Now I want to watch the bodies in here. So this, let me take this out. See,
I don't like that. We should have displaced lower already.
this inefficiency
So that's telling.
there to here. I'll make it color like this.
Hey, what's up with bro's mic?
This gap here trades down to that and end dog for today. And we're back inside of that inefficiency I outlined on the opening range gap. So we ran south side here, dug into this inefficiency a little bit. So that 8-10 level, we're just below that candlestick's low there. And now resume your attention back on this little segment of price action, which is framed on this area here where they delivered the bodies. Think of it like that paint roller analogy I like to use. There's not a whole lot of paint in between the previous day's settlement here and that candlestick's body and this candlestick's body. We had one single pass down. And yes, while this wick did go back above it, it doesn't have a body laid over top that range on the upside until this green candle here. Then they went down, took out the sell side here into that inefficiency on the daily chart, and then rally back up. And now we're back inside this little area here. So it's moving a lot around all these specific PD arrays, and it's not giving any real clear framework. So far, the initial drop into gap closure off of the inversion fair value gap, there was. That was a nice run. I like the volatility here. If you're just looking at the 1 minute chart, like over here, this could be a little perplexing. So now we're banging at the bottom end of that 1 minute gap. There. So they have a little bit of sell side right there. That was a little too shallow for my liking. Okay, 15 minutes trading so far. A little wild. See if we can get that deeper run into that low down here. Well, it should be. Same ICT. No. Awfully wild today.
It is. I'm looking at this low. We have a balanced price range on the 5 minute. So I think this is like the initial like. This is pretty choppy.
Just a little bit
But
deeper. There you go.
now I'm looking here, for sure. So, if we could get a trade back up to here, or if we can form a gap here, I think that would be a okay entry, but it's in a very deep
Right, so we had a
discount,
gap
so
open higher,
not the
came down,
best.
filled the gap, tried to rally, treated that area in here as a balanced price range, and we took another sell side liquidity. I'm gonna change this to electronic sessions now because we have opportunity to seek. It's a little smooth in there, even if it doesn't want to get down to the consequent version of this wick. This is a 1 minute chart on electronic trading hours data, not regular trading hours. That wick's consequent encroachment, I'm eyeballing that. The smoothness of these two relative equal lows. They took the sell side between this low and this low, which was a little too shallow of a jump below there. So now we're working inside. Now watch this wick here. So it would look kind of like this. How does it do that? Always jumps. There you go. That's good. All right. So back into end dog, and the high of that shaded area here, you can see quickly why I don't like to have all this stuff in my chart. Just the numbers is enough, and I'm constantly referring back to that level and where price is at. But for visual representation, for Caleb and for any of you that are interested in watching, is having on your chart, you can see the behavior of what price does when it gets there. See how the bodies are staying right at the top of that shaded area here? It isn't like a, I guess it'd be like a, I don't know what color that is, to be honest with you. It's just not the gray background. The body's just laying right at the top of that dash line. That's the high of this inefficiency here. Okay, see how it's delivering lower. We have minor sell side now here and over here. That candlestick's low, that candlestick's low. Buy side would be on the other side of this balanced price range, which would be right here. So this would be your minor buy side and your minor sell side. That's the pool of liquidity that matters, not your bookmap stuff. Okay. Bookmap probably hates me because I sound like I'm always dogging them out. I'm just trying to teach people to do things with price alone. Now, if you remember a moment ago, I was showing you, watch this wick here. And I drew that line here at the midpoint, which is 118.817.75. And I told you, watch the bodies in here. See how it's showing you it's respecting what? What's it respecting? It's the high of that inefficiency. And then here's that wick's consequent encroachment. It hits it there and delivers down into this range. That right there is enough for a scalp. And that's enough to do what a lot of the guys on YouTube do, like these small little, tiny little price fluctuations. So if you're having these higher time frame inefficiencies on your chart, and you're watching how price is moving and gravitating towards short-term sell side and buy side, you don't even need to have the full range delivered. And you can get these little bread and butter type, easy bread-winning, scalps. Let's get them and take them and run. That's all these high-frequency trading algorithms are doing. They're finding these price points here, and when they get the data, the supports that it's referring to all the bodies here. The opens and closes have to match. What's it matching? The high, that inefficiency I gave you on the daily chart at the beginning of the stream. Then it delivers, gives you one more chance to use that consequent encroachment of this 1 minute candlesticks wick. You don't see it, but you get it right there, and delivers lower. Just that alone That's a high frequency scalp. And they're doing these things all day long. Remember, this is a 15-second time frame. How many times is price using the PD arrays I've outlined here today and the fluctuations movement back and forth? They don't need a directional bias. Like they're not trading in a one direction only. You know, it's multi-dimensional, so it allows them to be very liquid and fluid and in and out, in and out. So that's what I'm saying. Like there's always liquidity. Always. It's not just above old highs and below old lows, but there's smaller microstructure that you have to be aware of. If you look for these types of things, what will happen is if you're using like very small time frames like the 15-second chart or 30-second chart, it helps you decide what you're looking for because you've got a lot of examples inside of one daily range. So look at all the fluctuations in here. I mean, if I would tell you that the NASDAQ is going to move 1,500 points today, would you believe me? Chances are you're probably thinking, well, yeah, that's a little bit of a stretch, ICT. But if you add up every tiny fluctuation from up, down, up, down, up, down, it actually does more than that. So from a quant stance, and yes, I'm familiar with that, and a lot of people that like to troll me in the past, I'm this and I'm that. Quants understand that dynamic. They don't have to have a daily range that's determined with a directional bias. It's good for you as a retail trader to learn how to do that. Let's keep this over here in view. A high frequency trading algorithm can operate without having a bias. All it needs to do is frame very specific reference points. And then when it gives a confirming quality measurement, meaning that if we know that this inefficiency is marked here, as I'll show you at the beginning of the stream, and I'll show you in a minute before well, not in a minute, but before we close the stream at 10:30. I'll recap some of the things that we can go back through your charts, Caleb, and use this video as well. He'll have to use my charts in this regard because he doesn't have the full package for live data on TradingView. So you'll use my chart here. You'll screenshot these, and then what we discuss when you get off work tonight. This is the conversation we'll have. But the bodies are respecting these key levels. And when we see things like that, for instance, like up here, we're looking at that inefficiency in the opening range gap on a 1 minute chart. And where the bodies were closing here, that tells you it's respecting what? The high end of that inefficiency. So it's likely that it will explore the other side of it. Other side of what? That inefficiency. Well, if it's going to go down to the bottom of that inefficiency, what's in close proximity to that? That low. So we'll be resting below that sell side. So they can get in here and aim for that little tiny little structure between the new day opening gap of September 11 and accomplish the run below that low for sell side liquidity. So it's accomplishing two things. It's using these PD arrays that I'm telling you to focus on, and then think about a narrative. And a narrative doesn't have to be for the entirety of the daily range. It doesn't have to be for the session. It can be done on micro market structure like this. Small little tiny little fluctuations that you can use to parlay and compound. And you can have a very, very small account. Very, very small account, and use just micro lots. That's not even, you're not even trading with big leverage, but you can do a lot of these types of setups and they can compound over time. And what happens if you use that structure, this approach, and you're finding maybe 2 or 3 of them a day, 2 or 3 of them a day, and you're gaining anywhere between 1.5% to 3% a day. Think about that. But you're out there trying to swing the bat, trying to get 10%, 15%. And you don't even know what you're doing half the time. So what I'm trying to teach Caleb is there is a plethora of opportunity every single day. Even in ugly price action, you can use a 15-second chart. But the problem is, you as a viewer, as a new student, if I tell you these types of things and I show you on a 15-second chart, immediately you want to sign up to TradingView or the equivalent and have a 15-second chart and try to trade every optimal trade entry, every fair value gap, every potential inversion fair value gap, every order block. And then because you don't know what you don't know, you end up hurting yourself, and you think, well, this is too complicated, when it's really not complicated. What's complicated is you're not settled in on what you're aiming for, what you're searching for in terms of a model or a setup. All you have to have is something that's going to be a catalyst for sending price higher or lower. What's the factor that you're looking for in price that's going to constitute a reason to expect price not going higher, not go sideways, but do go lower? Or why should it go higher but not go sideways? But I think I just said that wrong. Let me say it slower. This is where the Control M on Camtasia Studio would be, and I'd go in and say it again, and then I'd go back in the editing part and cut that part out and leave the part that I was supposed to say correctly. So what you're looking for is something that would promote a discount array to keep price from moving lower, but not go sideways, allowing and affording buy-side delivery. That means moving higher in price. Or identify a premium array where price should not go any higher, but do not go sideways, but affords the opportunity for sell-side delivery to unfold in price or move lower. Okay, so that's essentially what a high-frequency trading algorithm is coded around, that logic. That's all it's trying to do. It's not trying to be in there capturing the full daily range. There are algorithms that try to capitalize on that, but it's primarily in there with lots of transactions all day long, just constantly firing off. And one of the advantages of having those in the marketplace, where they catch a lot of flack, people that don't know how to read price or understand how these markets actually book price, they'll vilify algorithms. Algorithms are messing up everything. Algorithms are actually making things a whole lot better. They're providing a great deal more of liquidity, and that should be smiled upon. But when you're looking at John Q. Public, who doesn't really understand what price is doing and how it behaves, they're always looking for some external source to blame when they lost money because they over leveraged, they gambled, they overtraded, or they just simply don't have a model. They don't know what they're doing, and they think just by pushing a button like at the casino, they're going to get a jackpot. So when you look at things soberly like that, it's refreshing, number one, because it's not something that you should be fearful of. You should be thankful that there's a whole lot more liquidity in the marketplace because of their presence. They're always constantly buying and selling. It's not just they're only buying today or they're only buying right now. They're selling. They're buying and selling all day long. Boom, 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 boom. So knowing what you're looking for, for instance, again, I told you the 5-minute, the 1-minute candlesticks wick right here. Let me maximize it here. That low up to that high. 18.75. Okay, that's what I'm highlighting with that little line that I drew across earlier, right there. Look how it came up and hit that again, right there. That's a turtle soup. Old high, hits it. What's it going to do if it goes there? Well, it can run down to that and then target the lows I told you that my eye was drawn to here. And then that consequent encroachment of that wick down here. So if ICT could be personified for a moment, you can see that if I was a high-frequency trading algorithm, that's what you get. All live in front of you, explained. Make a meme about it. I mean, you're out here looking at silly stuff, looking at indicators and whatnot, moving averages of VWAP. None of that stuff is what's making price go up and down. So we have I don't know what's going on, but today feels like a lifetime. It feels like the last 30 minutes took like an hour and a half. Like time feels like it's moving extremely slow today. Very, very slow. But isn't that brilliant? Look at that. That's brilliant, isn't it? That consequent encroachment What's the price low? Look up here. I'm going to move it over so you can see it. That price right up here, upper left-hand corner, right where my cursor is. We're looking for 741.75. This candlestick's low to the tick, 741.75. Find that. Seriously, find that in supply and demand, Wyckoff, Elliott Wave, pitchforks. It's not there, folks. Okay, it's not. So you can break these same smaller microstructures down. And how does a high frequency trading algorithm add to a position? How would it do that? Well, if you're looking for, say, for instance, that consequent encroachment, I'm gonna make this a little bit bolder. And color it red. Okay, so that way what you see over here is this line over here on the 15-second chart. And then this level down here, I'm gonna thicken that up and make it blue. So that way we can see a range upon how an algorithm would see this and how it could build trades around it. So you have a short-term high here. This is a really good one because it wants to see an old high taken there. So what would be above that short-term high? Buy stops. Something trailed lower, okay, or a breakout to go long. It doesn't matter what the context is. It's just the premise is above that high, there is going to be liquidity. The algorithm that's being traded as a high frequency mechanism to harvest fluctuations in pricing all day long, it's not aware, just like the price engine is not aware, okay, of how many stops are above or below the marketplace. It doesn't need to know that. The premise is above an old high and below an old low, there's liquidity there. It doesn't matter if it's one contract or if it's 10,000 contracts. It's just, that's the underlying premise. That's why it's the same thing as a video game, where the coding is done in a manner where it's following the same logic. Pac-Man can only go this way or that way, and the ghost can only move around inside of that maze because that's the parameters upon which the maze was designed for that given level. And this is how many power dots are going to be in here. So it's always a static thing. It doesn't need to change. Every time you go to that same map when you play Call of Duty, the same stuff is there. What's changing? The players. But they have to stay inside that realm of whatever that map is at the time of their gameplay. So when the price is being delivered, the algorithm that delivers price is already predetermined. This is where it's going to go, this is where it's going to stop, and this is where it's going to hang around. It's all delivered by time. We get the opportunity to trade inside that map, okay, or that spatial defined range of price action in the presence of time that we associate with a morning session, a lunchtime period, an afternoon session, a London session, an Asian session. Each one of them is like a map when you're playing a video game, okay? And before that price is delivered, it's already predetermined. It's scripted. Now, a lot of it's calculated based on previous day's range, last 3 days range, previous week's range, previous month's range. And all of that's being done and calculated. And then the algorithm, if it's left to do what it's coded to do, it'll just do its thing. Unfortunately, on days like today and FOMC and non-farm payroll, it's a wonderful opportunity for the handlers, okay, the owners of this price mechanism. They get to go in and stir it up a little bit, okay, and it makes it a little bit more wild. And to the untrained eye, it looks a little unorganized. It doesn't look like there's anything to do. There's no trade setups when there's a plethora of trade setups. But the problem is it takes a great deal of understanding about how you would frame these setups. So let's talk about one. I gave you the consequent encroachment of this wick live in front of all of you. And I gave you this area here where I thought that was a little too smooth. And we were confirmed by the bodies up here, that inefficiency, that's this entire range here. We don't need, this is the main takeaway, folks. We don't need to see this low end of that inefficiency, that dotted line or dashed line here. That's the low on that daily inefficiency. We don't need it to trade all the way down there. I said that is the consequent encroachment, so we don't even need it to trade down there. Why? Because this is a wick. So the damage is probably done And how can I still use this low? Consequent encroachment. That just happens to be the lowest tick on that candlestick. Where did I get that from? What book did I get that from? Right, exactly. So when we have this old high here and it trades right back up into this candlestick's consequent encroachment, in case you haven't noticed this yet, this could be your model. You're looking for opposing premium and discount consequent encroachments on the wicks. Oh my goodness, that's very simple. That's easy, right? It's very easy. Wait for a qualifying indication and signature and price action that the price is respecting what? The high end of that range of this inefficiency. If you're still lost, if you just started watching the stream, you don't know what this is, I'll show it to you before I close the stream again. But here we have liquidity, and it's the midpoint or consequent encroachment of this wick I told you about watching. It trades above it. It does two things. It goes above a short-term high, where there's going to be liquidity, and it goes right to a point where the algorithm will refer back to what the price engine is doing. So there's this handshaking, okay? That's actually what the term is, where the algorithms that trade with the logic that the price engine delivers price. When those two come together in agreement, that's what causes these high frequency trading algorithms and price engine to meet perfectly. That gives you that very low tick being what I told you to look for. That's not random buying and selling pressure, because it's programmed and coded to go to these predetermined price levels. Because I mean, I'm out here telling you in a live setting, this isn't pre-recorded. I'm pointing to very specific things and you're watching them unfold live. It's this logic that creates the buying and moving higher, and it's the selling that moves from here and moves lower. It has nothing to do with how many contracts we as a retail trader or even institutional big conglomerates, they're not controlling price either. They still have to operate in that map, just like a video game. We can only see price go beyond this measure only if there's manual intervention. So if you can do an observation with me here, above the short-term high, trading into that 1 minute consequent encroachment wick that's over here, and it's trading right there. It hits it, and then we're looking for that consequent encroachment down here. They can go short here. Then it breaks down, a 15-second chart now. And then when it creates these volume imbalances, which is what I'm telling you to look for in price action, widen it up a little bit here. Widen it, not narrow enough. All this is porous price action. I'll explain that in a second. Give me a moment. This candlestick's close on this black down close candle. This candle here has a little bit of a wick, but there's no bodies overlapping and touching between the two. And then you have the very next candle here. This small little pocket of inefficiency, it's just really porous. There's no rhyme or reason as to why you could look at that with any retail perspective and say, this is something that would constitute a buy or sell. But I'm telling you that that is in need of patchwork. I've already let the cat out of the bag in last week's stream, but this is called patchwork, where the price engine will come back up and redeliver into that area, allowing for an efficient, not inefficient, an efficient delivery of price. So when the market trades in there, high frequency trading algorithms will work with this area and fire in shorts, 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 targeting this low, these smooth lows over here, the consequent encroachment of that wick. Any expansion beyond that takes us down into new day opening gap on the 10th. But the algorithm only needs, the high frequency trading algorithm only needs to see, okay, if I'm gonna sell short here, I'm gonna add to it here. So gonna short, add more, take something off below here, delivers to the tick down to the consequent encroachment of that wick right there. You aren't gonna get those levels of precision. You're not gonna get it. But they'll get it all day long. They'll get it all day long. And they'll do it with less time than 15 seconds. It's just constant firing. So there are time frames that are less than 1 minute that you can visually see this occurring. And once you see it, once it's like today, what I'm explaining to you today, you won't find that in anybody else's material. You're not going to find it. Okay. They can call themselves a quant. They can call themselves, former institutional trader, former market maker. This is all Greek to them. They have no idea what I'm explaining. But here I am. I'm explaining exactly what's going to happen in the market. I want a 15-second chart to the tip, over and over and over again. So we want to see if we can wipe out that low here, because right now it's hanging around the constant correction this wick, and it's spending too much time there. Too much time. So let's see if it wants to explore an outside run of that inefficiency. While we're looking at it, I'm going to show you what I'm referring to here again for the folks that are not really getting what I'm talking about. If you look at your daily chart on the NASDAQ, isn't it fun? When you start seeing price like this, you're never ever ever going to fear missing a move. You're never going to miss out on anything. Let's put it that way. Because there's always something to do. There's always something to engage in. There's always an opportunity. Actually, I started zooming in without showing you what I was pointing to. Okay, here. This candlestick, this big one, this wick, that low is right there. So what I'm doing is I'm highlighting this candlestick's low. And now I'm going to change it just a little bit in color, so that way you can see over on the right-hand side. See how it's different now? That's the high end of that range right there when we were watching it live together. I told you, watch this right here. See what the bodies are showing you? What this is, when I talk about price action and showing signatures, okay? This is where you write down stuff, folks, okay? You screenshot this, Caleb, and you start putting down in your own words what I've said, and then you start going into old charts, old moves, any time frame. The only benefit that these sub 1 minute charts provide you is it's lots more opportunity to study. And that equates to much more opportunities for the well-rounded, not, action junkie to go out there and trade all the time. There's certain things you still have to understand, look for. But look very, very close. What do you see in this swing high? What do you see? There's a couple things that's occurring there, and I've already taught about these before, but I want you to think about what's occurring there. And I'll tell you exactly what the signatures are. But here is that range, and it's anchored to this candlestick's low, which is there, and then candlestick's high here. So we're highlighting this big black portion of this big down close candle. Now we just expand it through. You see that? Let's go down into a 1 minute chart.
News low just got taken.
It's almost like I should know this stuff. Waiting for them to knock at the door on you. Oh, I do something I shouldn't see. Imagine being 20 years old and you're the only person that knows it. Oh, see, these are the stories that make me want to turn you off. Good, turn me off. You won't learn it. So back to this level here, I want you to think, we'll go back to this in a second. The buy side's taken, drops down. This little area of porous price action. There isn't bodies laying over top, okay, between this candlestick here and this candlestick. These are two very broad candlestick bodies. In between them, we have this little indecisive candle that Steve Nielsen would say it's some kind of silly pattern. No, all you have to do is look at the body that started it here and it encapsulates it here. So that entire range, that's your volume imbalance. You will not draw it on that candlestick body. Because some of you are thinking, you just drew that wrong, and you're typing up a comment if you already sent it on my previous posts. Just go delete that because you don't know what you're talking about. So this is a real volume imbalance that's defined when you have an indecisive candle in the middle of it, okay? So that's another PD array. Oh, but it's all still the same thing. Gaps are always, fair value gaps are all the same. They're not. They actually do certain things differently.
I didn't see that new day opening gap.
You'll learn about that as we go. You add to it here, you can take something off there. And then we have a small little inefficiency as well between this candlestick here and that candlestick there. We trade up into it. It delivers. trades lower and trades right to the tick. And then later on, we watched it doing, where was it at? All this body work in here at that midpoint of that wick right there. I know it's hard to see. Let me make it a little bit broader. There you go. Feels like you're stealing, don't it? You're getting all this information for free. I can't believe this guy's teaching all this stuff for free. It's because I don't need your money. Don't need courses. I don't need your handouts. I don't need your tips. I don't even need your thank yous. How about that? So if we look at the 748, and there you go. So when you start seeing a wick like this, and it starts building bodies around that, okay, any
constant
short-term
encroachment,
premium
daily
or
volume imbalance.
while it's creating this in here, you want to use that as a short. Or if you're already short, you can add a very small, like maybe toss on one more contract, toss on 2 contracts if you're holding like 15, 20 contracts. Just toss on a small little, just like kick it up a notch. Remember, like Emerald Agassi, he's a chef, used to be on TV, maybe he is still, I don't know. But he would always like, bam! And he would put the spice on there and kick it up a notch. It just gives it a little bit more kick in the ass when you got it right. It's just one more little chef's kiss, because it's getting ready to take off, basically. So when it's hanging around in here, what do you see? Don't worry, we're going to come back to this. You didn't finish this. I know exactly what I'm doing. Okay. Over here, what do you see? Do you see this gap here? Do you see the longest wick here? You see that? $768.25. Okay, extend that over, hammers it with this little gap being filled. So it's not just let's fill this in. You got to look at that wick. It's the longest one, so that means that's the one your eye's going to jump to. How far can it go past that little gap? Consequent encroachment there. Boom, it affords it. And then Tank City. Crosses over End Dog and an expansion even lower. This over here, when I was telling you, look right here, see what the bodies are showing you? They're indicating that, yes, we went all the way up to the tick of that End Dog. See that? Perfectly. And it's a high, highest high, lower high, so you have a swing high in place. But look what this wick is doing right there. What's it doing? It's only going half of this previous wick. It's exactly what I taught you to look for in this mentorship. 2024's mentorship. I'm taking you behind the algorithm, pulling the veil back, showing you things that nobody can show you. They cannot tell you the logic. I'm proving it to you in front of you live. How can it be cherry picked in hindsight? How do I have the luxury of being able to do that? I don't. I'm out here on a tight wire with no net. 18,831.50. What's the high of that candle? 18,831.75. You get 1 tick variance. So to get the high tick of that consequent encroachment, it has to deliver what? 1 tick above it. Is it making a run into the high of that same wick previous, the one that touches the End Dog? No. When you see me doing the recordings, and you've probably seen it in other videos where I've shown executions, and they'll see where I'm going short and I'll add more to it right there. And they're like, man, dude, like he's adding right there. I'd be afraid I was getting stopped out. Why? If you understand these types of information is in price, why would you be fearful of it? You wouldn't be fearful of it. If you knew what I'm teaching and proving daily, live streaming it, not hindsight, all these things that I'm teaching, it's the same logic. It's not morphing into anything different. I'm not form fitting it for the sake of having it for this example or that example. Go back and listen to the lecture. If you've taken notes, you already know what I just talked about here. So when we have, I got 8.5 minutes, and we're going to close it. I want to keep these down to an hour or so, simply because even Caleb's tapping out saying, "Dad, this is too much. I can't watch it all." It's starting to mess with his head because he thinks he has to keep up, just like most of you feel like you got to keep up. You don't have to keep up. You watch the content at your own speed and your own pace. Don't feel like you got to, constantly be in here every single day keeping up with the rest of everyone else. It's maybe doing it live, because chances are the people that are here live, they're not even taking good notes. They're just in here trying to wait for a setup or a signal to be confirmed. All right, so in this little area right in here, all right, see this little high? And we talked about that wick there. Let me take this off, clean this up. Bro says there's no algorithm. There's no algorithm, bro. If you look at this little, I grabbed the fib, didn't I? I need the rectangle thing here. Okay, so that's a small little gap right there, and I'm going to highlight it there. So now that low of this candlestick on that 15-second chart is this candlestick's low here that makes the high of that inefficiency. This candlestick's high makes the low of that box, okay? And that's this candlestick on the 15-second chart. So now watch what's happening here. Inside of this inefficiency, if you were just looking at a 15-second chart, you would think that this to this is your gap. When it's the higher level over here with this wick, consequent encouragement, you got to afford yourself the ability to trade outside that. If you don't start looking at price and start studying price like this and annotating them, and then go back and look at my trade executions, you'll see why my stop is where it's at all the time.
I really used to use this.
Why it's always looking phenomenal, and it gets close to it, and you're all sweating. I'm using this logic. I'm looking at how far can it color outside the lines, okay? How far can this wick go beyond that little tiny gap between this candlestick's low and that candlestick's high? If you don't look for those types of things, you could be right about what it is that you're learning from me, know where it's going to go, nail down a really good entry, phenomenal entry, maybe even add to an existing position, but then you do something ill-advised because you don't know the things I'm teaching today. This is a very high-end, top-tier type level of teaching. If you understand what's being presented here, you're never going to run short on entries or trade setups, but more specifically, how you are going to manage your dynamic risk. That means once a trade position is open, your stop loss has to start reducing in its risk. That doesn't mean jam it up immediately to break even or plus something. That's the problem. The problem in the industry is you're all trying to protect yourself from losing immediately when you have to allow and afford yourself risk. There has to be some comfort in assuming initial risk. Trying to remove risk is a paramount thing in trading, yes, but it's usually done so in the hands of the unlearned and the neophyte. Is they quickly want to get out of that pain area where if it goes against me, I'm going to lose. I don't want to lose. You got to give your trades time to develop a little bit and start running down range. Once they get to 25% of what you think the profit target is, then if you want to take it to break even and cover your cost of commissions, you're still probably going to get stopped out sometimes, and it'll still probably run in your direction. But that insight, that paid premium education that you're paying for by getting stopped out and not making all the money you thought you were going to make on that transaction or that trade, the information you get from it yields so much to lean upon in the future. But you're trying to prevent that without knowing that that's what you're doing. The things that you have that are going to be your best footholds in your progress are the things that you're never going to recognize because you're trying to do things like, I need to get my stops to break even, or I don't want to use a stop loss because I don't want to get stopped out because I don't know how to use a stop loss properly. That's what I'm teaching. I'm teaching that. So that way you should not be. If anybody sends me charts, or if you see them sharing a chart online and they're showing a profit that's open and running, but there is no stop loss, unfollow them or block them. Because what you're seeing is a clout chaser. That is the clearest indication that that is a person that is chasing clout. They want you to focus on what they feel in that chart or that picture. Look at the numbers I'm showing here. What you're showing me with 32 years of doing this is you don't know how to trade, and you finally got something lucky. And you don't want to put a stop loss on there between the time you taking the picture of it, because it might spike down here because you have irrational fear. Because you want to hold on to it. Hopefully it moves a little bit more so you can go online and say, but look at this trade ICT. But there's no stop loss. So you're a moron. You're an idiot. Okay? Because you're trying to sell the image to people that don't know any better, but I knew better. And people even less experienced than I do that make real money, they can look at this stuff like that and say, this is nonsense. But that's what gets everybody's attention online. They don't want to sit into a lecture like this where I'm literally telling you
he's talking about Stoic Trader,
why the market will go to where it's going to go, how far it'll go. And then when you take that logic, you start framing it around, okay, well, what happens if I start having a real bias for the session or for the day? How might that impact my trading? And how can I use this to benefit my stop loss management, my stop loss placement? How can I afford new pyramid entries if I'm on side, if the trade's really paying out in my favor and I have a whole lot more room for the trade to go in my favor, and I'm not past the 50% threshold of whatever I think that target is, say it's 100 handles that you're holding for. Some of you might be thinking to yourself, dude, that's so outside my realm of potential. I'm sure Tanya Trades probably thought that initially when she first started learning how to do this, but she's pulling down 100 plus handles right in front of all of you on her live streams. So, and she's a woman, not that that's a discounted opinion. That's actually me lifting it up. I'm trying to tell you, young men, that you're trying to do things through the perspective of an ego, and you're preventing yourself from growing progressively and modularly, and letting these things that are going to occur naturally, that's going to give you more insight about yourself, and it's going to reveal opportunities. What do you need work on? How can you know what that is until you fail at it? How can you, I got 1 minute left. How can you make yourself improve if you're not having adversity? Like weight training, you can't get bigger muscles and stronger muscles unless you have resistance. But you want no resistance in your trading. You want no resistance whatsoever. That's not the equivalent of low resistance liquidity. You still have resistance in your trade. It's not going a straight line. The best conditions in trading are trading in low resistance liquidity runs. But that doesn't mean it's not stopping and pausing and creating new opportunities to add more. It just means that that's the cleanest price run. Some of you want to take the furthest extreme and make it, that's the only way you're going to be able to do it, or you're not going to be satisfied. And it has to happen immediately, or it's all a scam, it's a fraud. And you just have too high expectations and too short time horizon goals. And they're in your way. They are in your way. And you came up with those ideas. Nobody else gave them to you. So this inefficiency in here, this one single candle on the 15-second chart, you think that it might need to come all the way back up to here for your entry. The low end of this rectangle here, which is this one right there on that, this candlestick's high on the 1 minute. That right there, that's where the entry would be. But your stop has to take into account that wick over here, it can trade up to its consequent encroachment. Now think, if that's occurring, what else do you have to factor in? The fact that this is an up close candle amongst down close candles. So that is what? Bearish order block. So your stop has to do what? Refer to that opening price, because that's the change in the state of delivery. In this price run here, that right there, that opening price, your stop has to have at least that in terms of where it needs to be placed. But that's a really big stop loss. No, it's not. I mean, it's a lot if you're trying to do 30 contracts on your funded account because they said you can trade it. I mean, I don't know. Is there even a funded account company that lets you do that many contracts? I don't know. It's suicide if that's what you're telling me. So your stop loss would have to be one tick above that. And that's above this inefficiency. See that? It trades up. Now, as soon as this candlestick closes and we start trading down, you would be watching and saying, okay, I have confirmation that the body didn't even close at the high end of this inefficiency, but it traded just a little bit outside of that one. That makes this a mohawk. All this price action here is a mohawk. We know that when this candlestick starts delivering like that. And any little retracement in here, what are we looking for? We want to see the middle of this inefficiency. Hold it at bay. It should not go any higher than that because it's already done what? It's done the work of going into the upper half of it. So we'll take this one off, say what I have to say about it, and then we'll close it for today.
In the middle of that CB, you also have the inversion.
It trades to it. Look at the bodies. Is it indicating that it wants to go in the upper half of it? No. The bodies are telling you. They're literally telling you that we've already done the work here. And because I told you over here, it's spending too much time right there. And watch and see if we don't get a flush down into new day opening gap and expand lower. Did it do it? Did you hear me talking about going higher? Was it a buy? Was it something like a turtle soup long, something like that? No. Like this is on-side LLC here, okay? that's what this is. This is the cult of winning, okay? You want to be a cult member, okay? All you got to do is show up. Be a proud member of the people that know what the fuck's going on around here. So that upper portion right there should not be traded to because it's already been delivered there. At the same time, we're consolidating and building blocky price action with these bodies right at the consequent encroachment. Let me tell you something, okay? There is never going to be a time. There's very few things that are absolutes in trading and technical analysis, okay? But we don't do technical analysis right here. We do technical science. A consequent encroachment of a wick, okay, when it has everything leaning that it's likely to go lower, if it starts building bodies of the candlesticks around that consequent encroachment, it's going to go lower. So if you've missed a price run, you missed it, okay? Well, okay, that's no problem. This candlestick, you know, the fact that it runs into this premium array, consequent encroachment, use the order block as your stop placement. That's your high end. You got to be able to frame a trade that's small enough that that won't hurt you if you get stopped out, but it's big enough for you to care about the trade. That's the balancing point. Do you care about what you're making and losing in the trade? Because if you don't, you're not trading large enough. But if you're trading so large that every little tiny fluctuation, or the moment you put the trade on, you're in panic, you're trading too high leverage. So you need to find out what that is. And the only way you can do that is start trading with micros. Just get good at doing that, because you're going to find that even that is going to be like a very hard thing to go through. You're going to be stressed out because the outcome is monetized, even if it's for peanuts. Little bit of money. The fact that you're making or losing, it's going to, when you make $20 in that, you're just like, yes, oh yeah, where's my stage? Everybody needs to recognize me. Look at me, $20, baby. Woo-hoo-hoo, $20. How about it? But if you lose 10, it feels like you've lost your wife. They just took something from you. You're missing your firstborn. See, your mind thinks this way because you have been learning your entire life to look at things like that. You're always a victim, but you're owed everything too. You need to change that. You don't have it because you don't go after it. And you don't know it because you haven't studied it. And you don't have any excuse. There's somebody right here talking to you that knows exactly what's going on, and you're not having to pay for it. So when you go through your charts, Caleb, today you're going to have to use mine, but the elements that price delivers like this with, that way you can get a good screenshot. Okay, that right there, that's this wick up here on the 1 minute chart. And then all the way down here, that's here, okay? So one of the other exercises, whenever you have a fair value gap on a higher time, well, you do this at any time frame. Don't think that what I'm about to say only applies to a daily chart. But if you have any inefficiency, think about what I'm saying. If you run standard deviations on that, that means if you use measure move concepts where this range high down to that low. If you take that range and you replicate it and move it lower, in other words, do something like this. I promise this is the last thing I'm saying. I have to get off here because I'm already wanting to talk about a whole lot more stuff. And my son's probably going to be looking at the video time and be like, see, You can't even. I can't help it. I loved it. I love this. And you love the fact that I love it. Okay, so anyway, here is one standard deviation lower. So it's reasonable to expect it to move at least that much. But what happens if it wants to go just a little bit further? What did I teach you? Whenever you have a range or dealing range and you want to see how far it can run for external range liquidity, what's the easiest little tiny little thing that you can change in your Fibonacci to get that level? Real quick, what is it? I
Negative
can't
point
hear
two
you.
five.
Say it louder. The
Negative
guy
point
in
two
the back
five.
on the right hand side. What was that? 1.25. Right. You are right, sir. You are right. Damn, he read my mind. Go over to the 1.5 level and just add a 2 to that, okay? And then, okay. Right there. That is a beautiful area to anticipate external range beyond the scope of just a measured move. You get that right there, you're content. You're done. Don't worry about chasing anything else. If you're trying to be a session trader, we're going into lunch hours. Just relax. You would have made more points, more handles, more ticks than any other YouTuber out there. It would have just simply been an outclassed, just total decimation. Trading with this down to the wick over here. Getting that move right to the tick, that right there would have been a superstar move for you. Like it would have supercharged you. It'd been like, man, I saw that coming. But now the problem lies in here. If you use that midpoint of that wick over here, that's that consequent encroachment. If we would have used that price with your limit, you never would have been filled. So then you would have had the conundrum of being right and perfect where price was going to go, but you can't get out of your trade. So you have to do what? You have to fluff up and afford yourself the flexibility to be slightly off with your exits. And that's always been my problem for the last 30 years. I have not mastered the element of being content with my exits. I'm never content with them because there's always opportunity to improve on them. And I'm always tinkering with that aspect of my trading. Entries, I have enough. Stop placement, I have perfect logic when it comes to that. I have no problems with knowing when to add to a trading position. I have no problem with pyramiding. I have no problem taking out partials. My problem is my terminus. My weakness as inner circle trader, the trader, is where my targets are satisfying my pursuit of perfection. And this is a problem for me because I'm slightly obsessively compulsive and I want to get perfect exits. But I know common sense will tell you too that it's not reasonable to anticipate and expect that you would have perfect exits. So if you can have rules that deliver on the basis of things I'm teaching here today, if you don't catch the last 15 to 20 handles, is it going to be earth shattering when you've made hundreds of handles in the move going lower? It shouldn't. So don't fall in the same mindset that I had that is not good enough. Because it is. It's absolutely Olympic feat level. Like it's gold medal winning. But because I have trained myself to think that it isn't and journaled early on all wrong, telling myself I should be better than this. I should be able to do that better. I should be able to know this by this time. I did all the things I'm telling you not to do in your journal. And it creates scar tissue. And I wrestle with these things. I remember trades from 30 years ago when I get into certain market conditions. I'm like, I remember the last time I did this. And it recalls something negative. And then while the trade's going on, I'm fighting to forget about that because I have scar tissue. So it's harder for me to wrestle through some kinds of trades because I have hurt myself in the past as a young man. So for the folks that are trying not to do what I'm teaching correctly, you're inviting that same problem. And it's very hard to deal with it, especially if you start trading with size. You start having real big positions on, it just exponentially increases the level of stress that you have to wrestle with. And that's the business. So anyway, that's today's lecture. That's what we got for you today. Hopefully you found it insightful. Hopefully you learned something today. Study this little area in here. I talked about on the regular trading hours. It's right now it's showing on electronic trading hours. And let me get one more shot for this area here. Right there, Caleb. You see that little pocket of price action? That's what we were watching. That becomes a balanced price range once it leaves it. And the bodies were respecting it there. Right there. And then everything starts going lower. So that's it. I got nothing else for you. I have lots more, but I found get off here. I'm fiending. I didn't do a live stream yesterday. Can you tell I'm going through withdrawal? But anyway, I'll talk to you guys tomorrow, Lord willing. I will try my best to schedule a London session. I had personal things that I take care of yesterday that prevented it. So it's not for lack of wanting to do it. It's just I had to take care of that. So that's behind me. So we'll figure out what we can do either tonight or Thursday and Friday morning, and then we'll see what we got for that. Just know that we'll be talking about forex, but it's just going to be in addition to what I'm talking about with futures. So it'll be I'll pull up some charts, pound dollar, the dollar index, and euro dollar, and I'll ring in some insights about those markets. But we're still primarily talking about the index futures. So don't think that it's going to be an entire session of just forex related information. It's just me bringing in information on London as it relates to those markets. Okay. So until I talk to you tomorrow, Lord willing, be safe.
Dang, we just keep displacing lower. This was a 930 reversal. Sure was. I kind of wanted to see us trade higher. I mean, I didn't see this new day opening gap that we delivered perfectly to. I thought we maybe could have taken these edges, but then we broke down balanced price range forms on the 5-minute. First presentation we trade into, order block here. This is all getting respected, and we're trading lower. And since we've had this move up higher, we're likely going to deliver much lower. And new week opening gap, volume balance, like all these are just extra credit. If we look at this right now, we have just taken sell side liquidity here, so I'm looking at this volume, the new day opening gap here. What is this? I don't know. Anyways, I'm gonna head out of here. It was a decent stream. I feel like it was live for 2 hours. I'll for sure be live tomorrow. I think. I don't know. I might not. But anyways, I appreciate you guys, and I'll see